Hi, Amber. Good to have you in studio. Amber, we all know that rail inefficiencies have really hurt our global competitiveness. Transnet and the Department of Transport have responded with the Freight Logistics Roadmap and the new network statement. Practically speaking, does these new frameworks finally give mining houses the green light to invest, or are we still waiting for the dust to settle?
Yeah, Quentin, I would say it's probably more of an orange light. The establishment of the Logistics Crisis Committee and the issuance of the Network Statement and the Rail Access Agreement all give very decisive signals to the private sector that the policy is moving towards private sector participation. The great thing about all of those instances is it means that there will be an opening of our rail infrastructure and network to allow for private sector participation, which is absolutely a positive for that industry. In terms of where we think there might need to be some additional work done is there is quite a lot involved in that network statement and rail access agreement and the framework around how the private sector participation will be incorporated, which needs to be beefed out a little bit more. There's a great skeleton that's been put forward, but there is some gaps around exactly how the tariff structures are going to work, exactly what performance metrics are going to be put in place, and how to hold the various counterparties that are going to be interacting with one another in this new framework to account, to make it really bankable and to give the private sector the comfort that the extent and scale of private sector capital that is going to be required to be invested into this network is really going to be put forth into a very robust framework. So I wouldn't say it's quite the green light yet, but it's definitely a very strong orange and we're moving in a great direction.
Interesting to know that it's a very strong orange light. But let's look at the investment opportunity. Is the play for mining houses to invest or to act as the operator, like running the trains, or is there a deeper opportunity for them to invest in the infrastructure itself, like the terminals? Also, where are we seeing most appetite from our clients?
Yeah, Kwenza, the opportunity set is actually quite broad. In the simplest format, it would be a mine basically entering into a contract with a train operating company to form an entity that can basically run the freight on the slots that were bid. And in that sense, it could be capital light or heavy, depending on whether they're leasing or buying trains. There is also a possibility for mining houses to invest in the rolling stock themselves, and so to acquire rolling stock and actually own that asset. Or lastly, an opportunity set which is much deeper but much more capital intensive, which is actually being part of the concession that is running and investing and upgrading that rail corridor, which is much more capital intensive but much closer to the actual operations of the corridor itself. And there are allied opportunities alongside that with regards to the establishment of an upgrade of terminals and dry ports, etc., along that concession line. And I think that the decision that will be made by mining houses around where they participate will very much be based on appetite for capital expense and return expectations and risk parameters around how much control and influence or understanding they're wanting to have within these different opportunities.
Great to know that since the release of these frameworks, we're quite aware where the bankability issues and opportunities lie. So it would be good to bring it back home a bit and really understand how does RMB structure a deal to ensure that it's bankable despite the regulatory uncertainties.
I mean, RMB, we thrive on the uncertainty landscape. We enjoy the complexity of these sorts of structures, and we are not worried about structuring for these sorts of things. I think where we have managed to build up a lot of credibility in structuring for both concessions and leaseco vehicles has been demonstrated through our roles that we've played in Gautrain and in other concessions like Nacala and Ghana Rail. And we've also helped establish leasing companies for rolling stock in South Africa as well in the past. And through the experience that we've garnered doing these sorts of deals, each of which had their own elements of uncertainty attached to it. We are actively engaging with our mining clients and others in the industry to understand what their pressure points are, what their appetite for risk is, and what sort of return dynamics they would like to see from these opportunities. And through that, trying to structure on a contractual basis to work around some of the shortfalls or gaps that have come through on a policy basis. We're expecting to see activity pick up more the closer we get to the release of the RFP, but we are actively engaging to try and assist in putting together solutions to help with our clients depending on which route they would like to take from the opportunities that are currently available in the market.